Hello, traders. Was the past week on vacation, so I take some days on holidays. Just came back on Friday, right after enjoy a great beach here in São Paulo, Brazil. Um, but I take a time this weekend to take a look on what's happened during the week. I decided to make a video just to try to highlight the best trades for the week and the setups that I can see based on Albrook's methodology, or at least my knowledge about Albrook's methodology. And that's what I'm trying to put in this video. So if you like this type of video, like a recap or summary of the week with the best entries, just let me know by the comments. Please support with a like, or even share with somebody else that would like to take a look what they did, uh, what you did during the week, and then compare with the entries that I'm highlighting here that are one of the best, according with my point of view. Okay, so just let me know if this video helps, is useful for you, or for beginner traders are trying to get consistency as soon as possible. So, before I start, I think that I'll try to define what is the best trade for me. Al Brooks has his best trades course that is a kind of summary of what he mentioned is the best trade, and he always mentioned that for beginners we always need to look for clear entries, good signal bars, with good context, weight trend, with good probability. In order, I'm trying to get two times rewards from the risk that you are exposed. So that's basically what Albrook's recommended, and I have to say it's not only for beginners. I think that for me the key of the consistency is basically you make swings at least, or at least when you're trading, you try to get 2 hours, two times your risk, each trade that you're doing. Basically, that's the goal. If you can do that, you can get a percentage of your let's say performance. Your profit factor could be 50%, but then percentage of your right profitable trades could be 50% or less. So that gives you an edge when we're talking about trader equations, and the long term, on the long term account will be will be positive, because you're gonna be winning more or gaining more, versus when the times that you lose. But essentially, what is the best trade for me, if I have to summarize, there is always four elements that you need to have always in mind when we're trading. Basically, it's the risk, the first one, probability of the trade that you want to take, the context where the trade is inserted on, or you are inserted on, and what is the target. And that's it, I think, is the most important thing. When we're talking about two times the risk, you always need to see if you have feasible target at hand. But that's starting from the target and going to the left. What we see is we need to have a clear target. When you have a clear target, you see, that's my target. And there is different ways to set targets. You can make breakouts or measure moves. You have a pattern behavior that is normal, like you have a wedge and you're looking two legs up or sideways. That's a target. But you always need to be conscious that you're looking for profitable risk reward, two times at least, at least your risk. That's basically what you're looking for, even for scalp or swing. That's the target. So when you have a clear target, that really helps you to make the trade management easy. You trains to be less anxious because the study that Albrooks makes for us, it's always says that you have a pattern, you have probability of get that target in a 60%, 50%, whatever, depending on where the context. Going to the context, it's important that we have clarity on the read. So we need to read the context as it is. So there is two contexts possible. I'd say it's we are in a trend or we are not in a trend. Basically, is that if you think in that binary way, you always need to think is if we are in a trend, we need to take trades with trend. If we are in a trading range, we can take counter trend trades based on some patterns that always are teaching us, right? So when the context is defined, you can be easily plan your next trade and then try to optimize your target. So that context needs to be defined. Usually, when you're trading ES M&E, context is defined by bar 18. That's also in all Brooks course. By bar 18, you have in 90% of the time the the lower or the higher of the day. So that's a kind of definition. So depending on the pattern that you have by bar 18, you can set your trading strategy for the next 60 bars. And then probability. So that's more related to the trade itself, and to the bars for your entry. When you need to have a clear motivation reason why your entry is not about because I'm gonna bet on this on that. You need to really have clarity about this trade, have a high probability to goes up or down to get my target before hit my stop, right? So that's high probability. So it goes up or down to get my target before get my risk, right? A low probability trades is basically another type of trade when you're trying to optimize the target, the potential reward taking low probability trades, but you are conscious that that you can be stopped and even don't lose the premise, and try to get it again. So those trades that I like most, low probability, because it gives you an edge in terms of risk reward, right? And the final note, no less important, is the technical stop or decision point. And also Ali says, binary decisions that we need to take. So sometimes you are in a good location, and then in a pattern that it needs to behave in a way that you say it needs to go down, it needs to go up in the next bar. If not, my premises is loose. So that's a binary decision. So when you have in that kind of, let's say, boundary, it's the best place to take a trade, because if it fails, it means that you can revert and get to the another side. That's basically the binary decision. Goes for another side or goes for the contrary. That's why that's important. And technical stop is basically, if we have a major high or major a new high or a new low, it makes that swing a technical stop. So we can use technical stop to define what is the best trade. So when we have all this together, we have what is really a best trade. A best trade is a one that has clear premises behind. If you don't have a clear target, if you don't know what is the context that you are in, you don't have a clear motivation or reason to entry, or you don't have a technical stop decision point behind, it's not the best trade. Best trade is the one that can give you a reasonable stop risk and favorable reward, and then with a good probability, right? Could be low or high, but good probability that the context is giving you. That's the one that is the best trade for me. Okay, so let's go to review where the best trade based on these critical elements that happened during the last week. Monday 22. So let's try to figure out what's happening here quickly. I'm not gonna spend more time in explaining the context, but just just try to identify where it's changing, where we can find out that we're in a trading range like this day. Bar one we can consider this is regular 10-hour chart, so I'll use regular 10-hour chart. So we see a strong opening gap, bull opening gap, with a gray bar one. So you can take bar one, of course, but you know the issue of this bar one is the stop. Is really huge stop, so that's why it's not my best trade. And as you have a huge opening gap, it could go below and then go up, and you know you will not lose the premise. So it's not a good trade from the point of view where we're looking in best trades. Okay, then you have leg one pullback, leg two H2, leg two pullback, leg three here in 7, and then we got this OB, right? This is a L3, right? A trigger in the 8. So when you have a wedge like this, you can wait for a lower high and then enter in the lower high, and then you see you have a clear pattern, you know, an opening gap and a wedge top that could drive you to close this gap in the 90, in the close of the yesterday. So you have this clear target here, and then you have a wedge top. You know, that is one of the patterns that Albrook tells us. Well, you can get a wedge stop, try to get close the gap, right, the opening gap. So that's why this 10 has a clear premise, a lower high, so you will not accept to go up again to the 7. So first of all, you can enter below that bar with stop order, stop here initially, but then when this 12 happens, the stop should be above the 10. So the actual stop is just about the 10. So that's a clear premise then, that you should, after 12, you shouldn't have bars above 10. So then you have 5-point stops with a let's say with a potential of more than 20 points here, 22 points or so, 21 points, right? Where to exit? So I'm putting in with blue dots here. Just we have a wedge here, 1, 2, 3, or 1, 2, 3. We have a wedge here, close to the target, so it's okay to get out on 19. If you don't, I wouldn't exit here in 19, but you know, just to 19 is about, it's about 13 points. So it's good from the point of view of financial. So you got 5 points of risk for 13 of more than 2 times. So it's okay to exit here on 18 or even if you wait a little bit more, you wait more, you need to exit on 20. It's 8 points, so it's more than 1.5x from your entry. That's the best trade, the first best trade with this target here. Clear target, clear stop, clear premise, three legs down, or closing this target. That's the potential, right? I wouldn't see here any buy here because we have the gap, on field. So this is really uncomfortable to have this open gap here because this goes there and then go up, right? This is a target, so it's really comfortable to get those trades. So if you're gonna trade, you're gonna get long right here somewhere. It needs to be very low in order that you can, put a stop below that opening gap and then try to get. So that's why this 48 is a best trade from long, because you have wedge 27, 32, 48, but also you have wedge 38, 43, 48, an overshoot, testing, testing breakout point. So it's enough to get this in a fade. So you can, once it's closed, you can get this in fade or even 49, above 49. And then you have 12 points. You see the behaviors after big one. This big one didn't make measure move up, so it's an exception. So it makes it move down. So it's go here essentially. When it's go here, so it's going to look for the middle. So middle is that line here. So when you see this couple of wedge, couple of legs up, so it's 12 points. It's basically traders are looking for 10 points, 12.5. It's a minimum target that the target that they're looking. So and there, that's why it's the day finish in a trading range. 42 is a good trade because you have a clear premise on risk. You have an IOI set up here, so it goes below. It needs to have follow through as it has in 44. If fails, it's gonna go up. So that's the binary decision here. That's why 42 is good. You have a clear target here in 90, but also in the breakup point. So you have the opportunity to get a one-on-one of that 42. It's 78 points there with a stop of, it's not so much stop, but it's 3.5 stop. So it's more than two times the risk. So those are the best trades that I see. This stop here is 5 points, 5.5 points for 12. It's more than two times the risk. So those are the trades that I see for the Monday 22. When it goes to the Tuesday 23, January 23, we see here very interesting pattern. So again, 10 bars sideways, and then it tries to break out below. Remember, this blue line is a breakout pullback, so it's the lower or the trading range. So I don't see enough space, for example, to sell this 13 in terms of, because the stop is right here, so it's so much stop versus the reward that you have. So it's not the best trade. You can take it for scalp, for example, but it's not the type of trade that I would like to take, right? Of course, you can kind of sell here the 14, something like that, in a fade way. But again, the stop is right here. You're in the middle of the trading range. That's not the best trade. The middle, you're just taking profit. So, but then we got this 21. We still have a magnet that before could be 21. I don't think that it's just because you have a space enough, with the stop that it has. So you have one-on-one for that trade, but it's not the best trade. I'm gonna take it out even. I don't like it. You have, and then it was the third leg, so it's better. You have one leg, two legs, and it's coming the third leg. It's better to wait for testing this. Even you can get the first signal like this 26. That's the best trade of the day. Even even if you're considering that you're gonna take two legs up, not testing the start of the wedge is right here, so you have a clear target. You have a tiny stop here because below this bar, and that's a binary decision, below this bar it's gonna break out this wedge down, and that's a low probability event, and there will not be any stop that is gonna stop this. So if you use a stop to stop trends, it's not gonna be this case if it goes and break out the bronze side of the wedge. This is a side that needs to be breakout, right? So if it goes below, we will be facing a low probability event, and you will need to revert short. So that's the kind of decision point that I'm talking about to define a best trade, right? So this is the entry, and you got, I don't know, it's gonna be let me see the number here. It's like a 3 point stop, so for a reward of 7.5, so it's more than 2 times, right? It's okay to exit here in the 46 because you have the bigger bar here, but it's a breakout, and then it's a second leg up, right? So it's perhaps the third legs up. So it's okay to get out here or even below the L2 if you think that you can get more from it. It's not still the target already reached. Sometimes I got that, so expect one more and get out below 48. In that case, we will get just 6 points, so 2 times your risk. And then you have the best of the best of the day. This is the tiny 1, 2, 3. It's a bull wedge bull flag, and then this beautiful 62. So this is a trade on high probability trade, this one. So you have here 4 points, even less, 3.5 points stop, and then you have probability of breakout and 2 legs up. So it's okay to get out in this bar. It's a huge bar, 69. So if you get out there, if you get out in 69, you might get 8.5, 8.75 is more than 2 times. If you wait for the second leg up, this bar 77 should be your exit, so 9.75. You see, there is no, just 1 point of difference. So it's okay to get out here because you need to really kind of suffer here with this correction, the sideways correction, right? Pull back. So it's you lost more even, you lost time here. Let's say that way. And then if you wanted to get it into the trading range, this trading range up, right? This trading range up is gonna be here. So 81 close there, right? So perhaps if you're still in the game on 81, would be a good exit for me. I will wait until 77. At the end of the day, you perhaps you will find a more directional day, so it will continue doing what is doing until that 75, close the highers, right? The high levels of price. So that's what I see as a best trade. So we see this as a wedge double bottom testing, breakout pullback, and then this is a wedge bull flag game, high probability trade. This is more a low probability trade because you're coming. It's not a low probability trade because we're in a kind of trading range, and very trading range price action. You don't see open micro gaps until here. It's three legs, so it's acceleration. It's normal to have that. So then this one, two couple of wedges, very nice trades, right? If we go to the next day, it's Wednesday. In Wednesday, let me see what I can see here in Wednesday. Okay, wow, opening gap again, huge gap, and then wedge bull flag, beautiful. So you can say leg one, pull back, leg two, that's the target. So when you enter here in the 8, you're looking for, it's 7 points stop for 15 points target. So it's more than two times. So it's one of the best trades of the day. It's okay to exit in 15 because it's a huge bar, it's the biggest bar. So okay to exit there with 15 points. It's more than 2 times your risk. And then you have 1, 2 legs. This 22 is okay, but you can have a third legs down, or you can even say so you can you see here that it's penetrating the breakout point. So it's you can have a third legs down here in a wedge. I mean, it's better to wedge to wait for a wedge, as you are in a kind of, let's say, more I would say more trend range price action, because it penetrates this swing point, right? So it's not so strong. But then when you have this failed L2, you see here 24 is L1 when trigger, and then 27 is L2, is go there and failed, right? So into this 28. When this failed, you can say, okay, we're gonna have another leg. So this is the start of the second leg. Let's say leg one, another leg here, and then you see leg one, pull back, leg two, pull back, leg three. It's a wedge, right? It's okay to exit in 37 because it's the test of 15. You might have there some buyers wanting to exit in the break even for the original entry. And then exit here. So it's okay to exit here with 3.25 points, and that's it, right? But then the potential of this is more up, right? So if you have 1, 2, you can guess this potential based on the pattern. So you can wait this like this. So it's a channel, so you can have the option, or you can have this potential target here. So it's not only here, or you can have, so these entries with this potential didn't work, but you could go there. Okay. And then when you have that wedge double top, this is a great pattern to get what? To get the closing of the opening gap. And that's what's happened. So 43, it's a great entry, because it's the minimum of that bar goes below the trending line of the channel. So it's a breakout of the channel. We have here 8 points, 8 points stop, and then you're looking for what? You're looking for this. You're looking for all these targets here. So here, let's say something like this. You're looking for 25 points potential. So 8 point stop, 25 potential is 3 times your risk. So it's very worth it. That's one of the best trades. So you are risking 8 points, but at the same time you can win 25 points, right? And this is a good setup for looking this this micro gap fill, right? So this gap fill. Well, what's happening is when you are managing your trend, you have to see what is really happened, right? So leg one, leg two, leg three. You can wait at 4 leg, but you see this 59. The 59 is so close 90 here. So why to wait more if you have the biggest bar 59? So this is the right exit. I will exit here. Eventually it's 20 points or so, right? And then, well, you wait. If you see that you have here L2, this is another good trade, and then you see, oh, this L2 here, it could trigger, basically goes there and and close the gap. So this 68 is a beautiful trade because it has a very binary decision about that bar. It's 3 points or 2.5 stop, and then you have a target. I think that is 2 or 3 times that one. Let's see. If we measure here, is, well, 5 times your entry, basically. That's the best trade that I'm talking about. Okay. With those couple of let's say with this one, and this one, you make your great day. So we're talking about 15, 20, 11. So talking about more than 35 points the days. That's what you need to get. Just that. All right. So that's Wednesday. Great day, great PA, great opportunities. 3 best traders that I saw here. And then on Thursday, this Thursday, right? So you see here again, opening gap, again, and same pattern. 1, 2, 3, wedge stop. You go short in 12, looking for at least 2 legs down, but then 2 legs goes here, short here. So closing with 16, so I will exit in 16. In this case, we are in a trading range, so it's 2.75 with a stop of this bar or this bar, 4 points. So two times your risk. Basically, that's the best trade. Good pattern, clear entry, good risk reward, and pattern with the potential to close this gap here. So you have the potential of go here, right? 20 points. You never lost that potential in whatever you do here, right? But then you have leg 1, leg 2, or even leg 3, you can say here, and that 20 is so you have a cleared, let's say, a target right here. 20, you can get it anywhere there, but in the close it's enough, and that's okay after a wedge to exit in the second leg. So like this, so you have this trade here. It's about 5 points or 4 points, 4.5, and then you got, let me see, you got here from here to here 6.5. So it's more than 1.5. But then if you really put your limit order to exit here, you got 2 points, 2 times your risk. That's the best trade when you have that clear target and you get it. That's enough to exit. Okay, you're entering the range, you need to exit. It's not, sometimes you're expecting to have this range, your range expanded, and then you let it, so you kind of, okay, I will wait to that 21, 29 to close, but when it's closed, you need to exit. This bar is not what you're expecting. You're expecting a strong bar closing above 11. That's the premise. Then you exit second leg. Well, this is not a good exit, I will say, entry, but again, so if you don't exit here in 29, you need to exit below 30, right? So that's essential. And then this 34 is a good trade in the sense that you have, again, the same, let's say here, you have this same potential closing that gap 9 points. And when you see the risk, because this is a binary bar, you need to have, it's about 5 points, 4.5. So you have 2 times your risk going there, basically, exactly. So you don't need, you don't expect bars going up 24. That's basically your premise. So your stop is here. That's bullshit to say that it's gonna be here. No, because this is a breakout pullback from this pattern. From here, you see here, fails, it's gonna get up, down. And then you have one, two legs. This is a L2, H2, so H1, H2. You're getting out after H2. That's the way that it managed. So H2 and getting out above the H2. Basically is that. So that trade didn't work. Good potential, but didn't work. And then it's called 45. 30, 45, it's pretty much the same, but better, right? So you have 10 points and then a stop of the same trade of 5 points or so, right? So 5 points, so that's the ideal stop, let's say. 2 times here, so you can go there. One leg again, pull back, second leg is go to the target, basically. Here you can even exit here, perhaps. I don't know. It's just one leg. You don't have, yeah. It's just a H1 here. So if you think that it's close enough to the target and so on, you can exit here. But then you can wait the second leg down and exit in your target here. Basically the target. I will exit there, basically, right? So well, that's the couple of good trades, best trades on selling. And then you have reversal up after testing this area that I think that is a breakout pullback area too. Something, I don't know. But then you have a wedge here, 1937, 50, 57. I will not sell a buy here because we're now, but then this one here, this one here, it's a ledge even. So you see here, it's a ledge. You have here 7.6 point, yeah, 6.75 stop, right? And then you're looking for at least this high or this close here, right? It's a target. So you have a clear target here, right? And then you have this bar. So 7 points for a target of yeah, this one here, 7.415, two times or more than 2 times your target. Okay, this bar 78 is pretty much, for me, it's the last bar of the day. It's an exit, so you need to exit here, basically. That's what you can exit and then channel line here if you want it, but this is, you have a high probability to have a vacuum when we have a trading range like this. But and when you see that the trading range we have a reverse after a wedge, so it's common to have. So this is really the best trade of the day, 70 points. You have here 10 points, 70 points, and 8 points here. So basically those 3 trades, you make your day. And the Friday, we go to the Friday, we have opening wedge. So with that bar 8, so that bar 8 or 11 is better, right? So but that bar 8 has a binary decision because you don't need bars below. So so you expect 2 legs up, starting there, 1, 2 legs, right? So it's a good trade 8, and it's pretty much the same with 11. The difference is that with 11 you have to stop below 11 because L2 failed, so it's L1, L2 failed. You don't want bars going below 11, so right after 11 it's a stop order trade, high probability to at least test this one, right? And then goes up because market needs to expand after this breakout. Then you see 5 points or 4.25 points risk, and then you can get whatever we can get here, 2 legs up, right? So it's basically, we don't know at the moment, but we know that we're looking for 2 legs up. So here is X 8.5, right? So that's basically that best trade in the short. Then it was even short long here because I trade here. I buy more in 23 or so. Oh no, I buy more in 28. That is best trade too because it's a binary decision here. We don't have bars below 28. That's why I took more in 28. Looking for what? Looking for this breakout here. Even 33 was a good one also because it's a breakout pullback, and then you expect as premise to go up, break out this and go up an acceleration. That's what you expect. If it's not happening, as didn't happen, so you get out below 35 as I did. That's basically what you need to do. It's a FPO and the times of below 36 I did sell. So that's the best trade too because you have clear stop above 35. It's a L2. It's a final flag. So you don't have bars coming up here. That's not the premise. The premise is this is a final flag. It's a breakout that fails. It's go to the contrary size. And then you have this huge, with strong pressure here, leg, a bear leg. Sometimes you can get out on 40, right? So if you have like a, I didn't get out. That's the thing. But you have 15 points here. So I made 15 points here before this complex minor reversal in wedge, right? So the 50 is a best trade because it's a wedge again. You have a clear stop here, and you have this potential here. Now we have this potential. Let's see. We have this potential. Leg one, pull back, leg two here in the breakout point here in this line. So you get the 50 looking for this target here. Didn't work, and that's why you need to exit above 54 as I did. That's basically how the trade works. Sometimes works, you have 40% of chance that didn't work sometimes, right? Or 60% of the time, depending, 50% of the time. Then you have a wedge here closing the day, and that huge 62. It fails here to get the target, so it's gonna try to get up, in the inverse. So it's gonna try to revert. So that's basically what's happening here. So 62 is a trade with wedge. It's 5 points. So you can try to get 2 times that. 1 leg, 2 legs. The target is right here in this line, or even the 36 when it started the FBO. But here you have a target here, in the close of in the open of the day, the bar one. So that's basically what's happened. Not so much space, but this is a great pattern to see if it's gonna close at the highest, right? So if you don't exit here, this is a second leg, you see like a triangle here. So then this 69 is opportunity to get out with good bull bar, or even below 69 after L2. This is a L2, so I usually get out So didn't work this one, but this is a best trade too. One, two. This one didn't work too. Those two best trades that didn't work was these two. This one worked, but you didn't. If you scaling here, perhaps it wasn't the best outcome here. Here you see 8.5 points. So was not an easy day in that sense, because you didn't have chance to good access in those in this day. That was the main difficulty here. So you didn't exit here because you were satisfied on financial, and you see, this bar requires a second leg down. You got this small second leg down that you expect more than that, even closing here, or even testing this ledge here in the left, but didn't do it. So the region of 4900 here didn't do it. So that's basically the decisions that we need to take. But those are the best trade that I see, based on the criteria that explains to you. So guys, let me know your comments if it's something that makes sense to you, or let me know if you see another best trade that I didn't consider. I will be happy to reply you in the YouTube comments. Thanks for your attention. Thanks for hitting me here. Let me know any suggestions you might have.